Here's the truth about the 1%, and they're never going to teach you this in school, so listen up. The large majority of people who go out and try to become millionaires do become millionaires. It's really only a matter of time if you're being productive every single day. You could literally go out to a middle-class neighborhood, go door to door and ask them what they do to make money, what they do for a living. And some people on TikTok even do that. And you'll have a teacher and a cop. You'll have someone in the military and a stay-at-home mom. But they have no side hustles. They have no intent of ever becoming a millionaire. They literally live their whole life not even attempting to become ultra wealthy. But it's that 1% of people that go out and attempt to do it that succeed. So it's not like there's millions of people trying to be millionaires and failing. Most of the people that try, which is a very tiny percent of society, do succeed. If you want to be a millionaire one day and you want to live a life of financial freedom, press this plus button and I'll help you out.
How am I making my kids multi-millionaires and saving myself $200 a month in the process? First, we need to understand that according to the USDA, it costs about $12,000 a year to raise a kid. I'm going to show you how to save $200 a month and make sure that you follow me so you know how to implement this. Let's say you have a full-time job that pays you $60,000 a year. In your business on the side, you can pay them up to $12,000 per year. That's a tax deduction to you and it's tax-free to your children. That lowers your taxable income. Your kids receive the money tax-free, you get to deduct that. That saves you $2,500 a year in tax savings. Because they're minors, you control the assets. So if you invest that $6,000 into a tax-free account, at 6% interest over 18 years, that money will turn into $196,000. Once they turn 18, you don't put any more money into that. Over the next 47 years, by the time they're age 65, they'll have $3 million saved up. While they're kids, that saves you at least $25,000 in taxes. And when they're adults, they get $3 million.
What's up, man? How's your job going? I actually quit last week. What do you mean you quit? So what are you going to do now? Well, we're financially free now, so we're traveling full time. We're doing whatever we want. What do you mean financially free? Do whatever you want. What is that? Financially free meaning our passive income exceeds our monthly living expenses, so we don't have to work anymore. Passive income from what? From our Airbnb properties. They're short-term vacation rentals. You'd be really surprised how much money you can make after all expenses and mortgages are paid from just a couple properties. So like how much money are you making on these 4 properties? We're going to be cash flowing on average around $20,000 per month. That's after all expenses paid. So do you pay someone to manage these properties? You can, but they're going to charge you anywhere from 20 to 40% of revenue most times. So we just self-manage. But how do you do that traveling full time? We use apps like Your Porter and Price Labs, and then we hire local cleaners and handymen. So basically we can manage these properties from anywhere. Tell me more. Just follow along, man. Resources in bio. How am I supposed to work this job until I'm 65 years old? It's miserable. You know, you could probably achieve financial freedom a lot sooner by investing in short-term rental properties like Airbnbs.
Aren't they expensive? Like, you gotta pay the mortgage, you gotta pay the cleaners. How do you even make any money?
Actually, they're really profitable. Only a few properties could set you financially free, meaning you have enough passive income coming in to cover all of your living expenses every single month or your desired lifestyle.
I see you answered my question without, really answering my question. How much money can you make on it?
Last month, our 3 properties cash flowed us over $15,000. And we just stood up a 4th property this month, and we're probably going to be cash flowing on average between $15,000 and $22,000 per month.
So you mean to tell me...
Yes, just a few properties set me financially free. I actually finally quit my W-2 job this week.
What are you going to do with your time? How old are you?
Just 28, but we're going to just travel the world, do whatever we want.
What are you getting? These prices are crazy. I'll probably just get an appetizer to save money. Yeah, I'm not surprised. You've always been frugal. Hey, can I grab another drink? Yeah, you can just Venmo me later. You want me to Venmo you? I've literally had 1 drink. I mean, I had to buy the drinks. You invited me over, bro. Stop being so cheap. Being frugal is at the expense of yourself, which is perfectly okay. Being cheap is at the expense of others. We want to avoid that.
Here's how to pay off your debt in 5 years or less. And anyone can do this. You need to figure out how you're gonna get a raise from your boss, or you're gonna start a side hustle, because with the income that you're getting right now, it's just gonna barely get you by and cover your payment. You need the extra income, and here's what you're gonna do with it. So don't pay the largest one, don't focus on doing double payment, but what you need to do is pay off the smallest one. So once that one is paid off, now you get the extra money from that, you can dump it into the next one, and then eventually it's gonna be like a domino effect. It's also gonna help build up your confidence because you're making progress, and it's gonna get you excited, and you're gonna continue doing it, and eventually you become debt-free.
Stitch this with your most unpopular piece of advice that you swear by.
Money's not real. What something is worth is not tied to time and is not tied to an object. An hour of your life is not worth $15 any more than a year of your life is worth $50,000. If you ask 10 people what a house is worth, you're going to get 20 answers. During the U.S. housing crash, when houses went from 400,000 to 100,000, where did the 300,000 go? It vanished, like it never existed, because it never did. And in the last 10 years, when house prices went from 100 to 400, where did the extra 300 come from? It wasn't like someone came by and gave it to the homeowner. It appeared out of nowhere. School won't tell you this, but the value of something in terms of money is tied to your feelings. When society is happy, the price goes up. When society is sad, the price goes down. This is why Warren Buffett says you need to be fearful when others are greedy, and greedy when others are fearful. Take care.
Mina, do you know the difference between an asset and a liability?
Yes.
Okay, can you tell me what an asset is?
An asset is something that you own and it makes you more money.
What about a liability?
Liability is something that you buy but it doesn't make you more money.
Okay, which one is better, an asset or a liability?
Asset.
Okay, so if you go shopping, you buy clothes, is that an asset or liability?
Liability.
Why?
Because it takes some of your money away.
That's right.
Yeah.
The number one thing to watch out for when buying a car is the bait and switch with the interest rate. The finance guy will tell you, we spoke with the bank. Your interest is 8% and your payment will be $438 a month. But I know the bank personally. If you get our gap/worthless service plan for just $3,000 more, I can get the bank to lower the interest rate to 4%, and your payment will only increase to $440.
I mean, you get certified peace of mind for next to nothing.
And there is your lie. There never was an 8% interest rate. The rate the bank gives is based on your credit score. It is not negotiable at the dealership. The rate was 4% all along. The finance guy told you it was higher to reel you in. In truth, your payment was $390 the whole time because your interest rate was 4% the whole time. You just signed up to pay $50 more a month for 6 years, and they made you believe that you had some fantastic deal for $2 a month.
And Wall Street isn't concerned that Amazon has never made a profit, not a dime. In fact, it lost $125 million last year. The company says it's investing for the future. Skeptics say it would have to sell every book being sold in the world today to justify its stock price.
I think my generation grew up with Sears. And Amazon is worth 20% more than Sears is worth in market capitalization.
How do you view that phenomenon that Amazon today is worth more than Sears?
Investors are focused on the future. Amazon has growth potential that Sears doesn't.
A couple of geeks who sketched out some software could destroy Sears Roebuck.
That's the beauty of technology and the microprocessor. We've never seen anything like it.
Why do I always buy the buildings that my businesses are in? Let's break it down. As a real estate investor, I am always looking to expand my portfolio and not somebody else's. When you buy a building in your name or a separate LLC name that houses all of your real estate properties, your business can then rent that building back off of you, which pays you a lease payment. You are able to write off, of course, all of the expenses that are related to that building. And of course, if it produces a net income, then you will have to pay tax on it. But here's the other part. The goal of starting a business should never be to work forever. The goal should be to start a company, grow it, scale it, and eventually have something that you can exit and sell on the other end. Owning the building that your business is in not only makes you more attractive to potential buyers because you have the asset, but it also helps with financing because the bank now has something to use for collateral other than just business equipment.
Great news! I just sold my Tesla stock for a $20,000 profit. I'd love to hear that for you. You do know you have to pay taxes on that though, right? What? No? Yeah, you'll have to pay either long or short-term capital gains taxes. How long did you hold the stock? Over a year. Please tell me that means it's a long-term gain. You're in luck. Stocks that are held for more than 1 year are taxed at the long-term gains rate of 15%, while stocks that are held for 1 year or less are taxed at the short-term gains rate up to 37%. Is my $5,000 loss on NEO taxed too? No, you can actually subtract that from your Tesla gains, so only $15,000 would be taxable.
What's a piece of information that can save you money that most people don't know about?
I'm always surprised I don't see more people do this, but if you're going to buy a house, go get a real estate license. So it's not that hard. You have to take some classes and you have to study and take a test. But once you do that, if you go buy your house, you can get paid a commission to buy your own house. So when I bought my house, I got paid $14,000 to do that. You can't use it towards the purchase or anything, but you get that in a check after you buy your house. Kind of nice way to be able to furnish things, replenish your savings, whatnot. So there's a tip.